Hi, guys. Welcome to Founder Bounty. Don't forget to like and subscribe if you enjoy this episode. Today we have Mohamad. Mohamad, thank you so much for being on board. We know each other from KFU. Mohamad, generally speaking, is a founder, investor, has been through the entrepreneurship journey himself. He also advises a bunch of startups in the Middle East, and we're really going to focus on this area today. So it's a pleasure to have you, Mohamad. Please feel free to give yourself an introduction.
Absolutely. Good to be here, Vlad. Takes me back a few years. I think I was in San Francisco when you and I had our first call, visiting, and we were talking about on-demand fuel delivery. That was
That's
uh, that
right.
was good
That's right.
fun.
I was in Boston. Yeah, yeah. I remember
Yeah,
that call.
yeah, terrific. Yeah, look, I've been in the digital space for the last 5 or 6 years. Been here in the UAE for the last 11 years.
Hmm.
Uh, First venture into digital was Kafu, like you'd mentioned, which is how and where you and I met. I was at the time involved in helping set up a corporate venture fund
Hmm.
for a local oil trading house here that had an
Hmm.
interest in diversifying out of the traditional oil trading space into digital and investments. Phenomenal experience in how quickly we were able to grow and scale that business, and
Hmm.
uh,
Hmm.
definitely a unique experience in how you're able to execute within a corporate venture and how quickly you're able to move and grow businesses. Quickly after that, I'd also co-founded a real estate marketplace called Urban, which what Urban did is take the entire rental experience online. That was also funded by that, or initially anchored by that corporate venture fund. And we went through an outside funding round, and eventually, for the last 8 or 9 months, I think I joined the Property Finder Group, which is the largest real estate search portal in the Middle East. We're active in many countries. We're here in the UAE, Saudi, Qatar, Bahrain. We're also very active in Egypt and Turkey. And what I do here is I look after the mortgage side of the business,
Hmm. Hmm.
a business unit that's called Mortgage Finder. And yeah,
Hmm. Hmm.
exciting times, and great to be in the innovation space here in the region.
Absolutely. No, you clearly have a lot in-depth experience with doing business in the area, and that's something I'd like to focus on a little bit later on. But something I like to do with all of my guests is ask a very simple question at the beginning, which is, what do you think makes a good entrepreneur?
Spirit, I think, above and beyond anything else. Courage, and I think it definitely takes a rebel, and a lot of nerves. Yeah,
I'm going to say I agree with all of those. I think courage and a rebel. I like that word. I haven't heard that one before.
yeah,
That's an interesting one. But I would
yeah,
say outlier. I would say outlier is definitely similar to rebel in some ways. Someone
yeah.
who is slightly different and willing to take that challenge. And maybe we could focus a little bit about your experience in actually building a company and what you think is needed, because obviously you've been very successful with the ventures that you've been building. Maybe you could talk a little bit about what you think is needed to build a company from scratch, and the ecosystem, the team, and you can focus on that, and then at a later stage when you are scaling, the kind of attributes that you need.
Yeah. Look, above and beyond anything else, it's always people, right?
Hmm.
Um, you could have a horrible idea, but if you have the right team behind that business,
Hmm.
you could somehow, pivot and shift your strategy, change your plan, and, eventually build a great business. And I know it's a cliche, and I know we hear a lot of people in podcasts and a lot of the books that we read, but it is the ultimate truth that
Hmm.
if I
Hmm.
had to say choose one thing that it takes to build a great business, it's always going to be the team. With that said, it's equally important that you have that alignment of vision, right, between the founder, the team, and the investors, right?
Hmm.
So
Hmm.
choosing your investment partners early on, from the very, very first angel investors all the way down to your Series B, C, D, E, F, G, is always making sure that everybody is aligned on the vision and the direction on where you
Hmm.
want to take the business.
Hmm. Hmm. No, I completely agree with that. I think team is so paramount, and with a fantastic team, you can always find a way, right? There's motivation, and I think with a startup founder, there's no uh, there has to be a solution for every problem, right? That's the core of the thing. There's always going to be a solution, and a good founder will always find a solution. But founders, I mean, focusing on let's say, one of the ventures, was there anything else that you would include in that? Of course, funding and maybe focusing on the local market. Was there anything else that kind of differentiates that specific, the Middle East area in general to, let's say, the US and the UK, which would be attributes to the founder as well?
Look, again, back to basics, right? Even when you look at the core of Silicon Valley, right? It's that intersection between University Avenue, which is Stanford, talent, people, and Sand Hill Road, which is VC, right? And that's the key to making it happen. Now, I'll speak from my experience, particularly in Dubai, that I find incredibly unique, very encouraging. Uh, it's the healthy regulatory environment that is genuinely supportive uh, of the growth of this innovation ecosystem. So
Hmm.
if you add that to the mix, if you add talent and money to a healthy and encouraging regulatory environment, then that really is the holy grail. On top
Hmm.
of all of that, naturally, in order to grow and scale these businesses and capture the right level of interest from investors, you need a scalable business model and you need the right market. So sometimes you have a very, very large market, but a business model that has limited scalability. And sometimes you have the other, the other mix. So it really is, you keep adding things to the mix. But if you were to start from top down, it's always the right team, then
Hmm.
access to the right capital, a supportive ecosystem around you, and then scalable business model and a sizable market and a meaningful problem that
Hmm.
you're trying to solve. I think
Hmm.
if you look at all of the successful businesses out there, what they really all have in common is this um, you know this customer centric approach, the why, the purpose that business exists, which commonly is solving a consumer pain point and a significant market problem.
Hmm. Hmm. No, absolutely. I mean, you've obviously been proven right. You've had two very successful ventures, and Keifu is one of the most known out there. But focusing a little bit on, let's say, the local ecosystem and potential companies that are looking to enter the local ecosystem. What kind of, I guess, uh, advice would you be given to a local company that's looking to enter, that's looking to scale, looking to grow? Is there anything specific that they should be focusing on?
Um, Again, if they have the right team, if you're talking about the funding ecosystem or the investment ecosystem, um, definitely build your network. I always encourage founders to talk about their business, talk about what they're doing, build a social network around them with other startup founders, and ask for, reach out, ask for help, ask for advice, ask for introductions. Um, Transparency is key, I believe, to success in business, and whether you're in this part of the world or any other parts of the world. So I always encourage founders to be very open when approaching investors. Sometimes you approach an investor where you're at an earlier stage than their comfort zone, right? Um, Ask them, hey, I'm an early stage raising my seed round. You guys usually invest in Series B onwards. What would it take for what would it take for you to be interested in my business. So definitely, talk to other founders, draw from their experience, and build that solid network.
No, there's, I mean, obviously, the area is up and coming in terms of in terms of the tech ecosystem has also exploded, and as you've said, there's a lot of government support which is coming in to support, local founders, local enterprises, and I think, as you said, that adds a lot of value to companies and local founders that are looking to grow their businesses. In terms of, I'd say a business that has grown there, I from a European and US perspective, you tend to focus on local markets that surround Dubai. Is that something that you'd recommend, rather than reaching out to, let's say, the US, Europe, to really focus on the local markets, kind of, once you've conquered, let's say, Dubai?
Look, um, if you were to follow the market trends in this region, 99% of the startups you see are simply, imitating
Yeah.
other concepts that have succeeded in, either West or East, and localized, or, build a localized version of that business.
Hmm.
Mainly because that is largely what the investment community is interested
Hmm.
in, right? Um, so definitely a proven business model elsewhere is something that you want to look for. Things to watch out for is, um, you know cross-border scalability in this part of the world is a bit of a challenge, right? So
Right.
always taking a digital first approach, building a business model that has a clear network effect, embedded, and can
Hmm.
apply to multiple geographies, is also something very important, right? To
Hmm.
achieve that
Hmm.
that element of scalability.
Hmm. 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 Absolutely. Focusing a little bit more on the investors, obviously you have experience with this, advising high-level family offices yourself, and being surrounded and worked in venture capital. Um, for local founders, what would you say is the best way to approach and start a conversation with an investor? Is there anything particularly you think that founders should focus on?
Yeah, look, I mean, start with the basics, right? Identify the potential investors that would take an interest in your business. Write that down, create that sort of, use different tools like, Founder Suite or any other sort of investor CRM type of tools to identify as I like to call it, the hit list of
Hmm.
investors that you
Hmm.
want to go after. Uh, Definitely prioritize institutional investors over family offices or private investors. It always helps you and puts you in a much stronger position as a founder when you
Right.
go to a family office as a co-investor, as opposed to them leading your investment round. So because you're going to them and you're saying, "Hey, I've got a great company, I've got an amazing team, and guess what? This institutional investor is on board, and he or she have looked at my business and validated it, and they're leading my round." That makes your conversation much easier. Now, having said that, look, this is validation is very important, and one
Of course.
semi-controversial advice that I give to founders is always be mindful of your optics as you're navigating the fundraising process, right?
Right.
Substance is important. The underlying business model is critical. The capabilities of your team are important, but your optics are very important, right? Who do you have on your cap table? Sometimes can determine whether or not a funding round succeeds or fails. Um, there have been a few founders who started a business with high profile names, whether angel investors or seed investors, that came from LA or San Francisco or London or Berlin. And that always definitely adds tremendous value to the dialogue with investors. Keep in mind also that a lot of founders also make that mistake is they tend to reach out to so-called strategic investors, right? Which are typically the large family offices who are involved in, certain sectors. That could, it's a double-edged sword, right? Because sometimes you're giving up too much control, right? So if you go to
Of course, yeah, yeah.
let's say you're in the automotive business, right? And you go, dilute 20, 30% of your business and give a board seat at an early stage to one of the local automotive groups, right? You want to ask yourself, okay, this is going to add tremendous value in taking me from 0 to 1, right? And it's going to give me great value here in my local market in the UAE. But is my vision to only build a UAE company,
Right.
or is my vision to
Exactly.
build a
Yeah.
regional or global company? And what
Yeah.
kind of value would this investor, brings? And that applies to whether you're in automotive or oil and gas or real estate or retail or e-commerce or fintech. Sometimes a
Absolutely.
fintech goes to a bank, right?
Well, I think that, I mean, that's the reason for high quality advisors, that can advise you on these kind of things, which are so essential, because you really want to have that cap table set and thought about and thought through. And I think that's why a lot of entrepreneurs do turn to you for that kind of essential advice, because it is so important. I also believe in this, to have quality advisors, with you as your company grows, that can advise you on such essential things that maybe a first time founder will never know, right? Even though his business is doing great, later on down the line, he'll realize, hey, I made that mistake. I should have listened to that advisor, at point XYZ, So I think absolutely, totally agree with you. I think thinking long term in the strategy, whether you want to stay in the local market, grow this and that applied to obviously us as a fuel on demand company, the first in Europe, when we did have strategic interest as well as local interest as well as angel interest. And then that decision was, hey, what do we really want to do? Do we want to potentially even franchise the business, into African markets or, other type markets? So I think getting advisory at an early stage, and I know you do advise a bunch of local founders, is absolutely essential to making sure that you can really focus either on exits, acquisitions, or really build a large company.
And
So
I
no,
genuinely do it for fun. And I think it's one thing to mention here also, Vlad, is um, even when you're selecting your mentors or your advisors or your
hmm
network, your support network around you is, um, I don't like to take the commercial approach to this, right? If you're going to work with somebody and call him or her an advisor or a mentor, you want somebody who's genuinely interested in your business and who really does care
absolutely.
about you as a founder, who
hmm
could relate to you as a founder. Sometimes
hmm
a lot of founders, they might go to bankers or professional advisors, and
hmm
those guys are great, right? They really know what they're doing, but um, eh,
They
there's
don't
that
understand the
element of
journey, right?
yes, right.
Yes,
You got to
agreed.
know somebody who's
Totally.
been through the pain, who's made the wrong
Totally
hires,
agree.
made the
Absolutely.
wrong offers, gave the wrong titles at the beginning.
Yeah. Yeah.
And
I think, yeah.
one more thing, Vlad, is one advice that I always give founders is you've got to read, right? Lots and lots and lots of reading because it could there's a lot of shortcuts in reading what mistakes other founders went through.
hmm Absolutely. And this is one of the, this is what we're trying to do at Founder Bounty as well, and help to entrepreneurs who are looking to start, understand and learn from the mistakes that we ourselves, and both you and me and have been through, and not make those mistakes again. Again, this turns back to the reason for having high quality advisors. But you're absolutely right, that founders have been through the pain, been through, failure really allows you to create a successful company, because you really learn yourself from that mistake. And this is the reason for us trying to have conversations with as many guests as possible. And you're obviously an expert, and you've been through and built successful companies yourself, and you understand the importance of what decisions you need to make. And as a founder, you need to make decisions on a constant basis that are so vital, and it's moving so fast, right? That later on can impact your company, whether it be investors, whether it be a strategical partnership that you want to do, or maybe a paid pilot who you want to do it with, etc. So there's so many things that need to go right for you to for you to build a successful company. And
Yep.
this is where I guess a lot of top VCs say never build a company right away.
Yep.
But no, coming back to the point about the local ecosystem and local founders. Is there any particularly advice you could kind of focus on? I know, obviously, as we've mentioned, you do advise a bunch of founders, but I guess advice at Series A onwards is slightly different from the earlier stage companies. So we could split this into two. Maybe you can focus on certain first second time founders at a pre-seed seed level, and then Series A, Series B onwards. Is there particular advice you'd focus on?
Look, it really, I mean, when you talk about advice or mentorship, it really largely depends on each founder, the nature
Mm-hmm.
of so who the founder is and how experienced are they, um, what kind of business are they building, and what stage they're in, right?
Right.
And what their pain points are. So, for example, there are times when I'm having conversations with founders about leveling the team and
Mm-hmm.
hiring the right people at the right time, at the right job titles, at the right, sort of equity awards, et cetera, et cetera. Because
Mm-hmm.
these mistakes sometimes could be very, very costly in the future.
Mm-hmm.
Um,
Mm-hmm.
I think one of the areas that I feel are always critical, particularly to pre-Series A founders, is staying mindful of your your cap table, right? Not
Mm-hmm.
just from
Mm-hmm.
a value creation point of view. And I always talk to founders that when you're speaking to investors about your cap table and your valuation, it's not so much a negotiation about what you earn, about what you
Mm-hmm.
own. It's in their best interest. You want to frame the conversation with the investor's interest in mind to say, hey, I'm a seed stage company. If we value the business at X, it's going to make our Series B more difficult. And if our
Mm-hmm.
Series B is
Mm-hmm.
difficult, then you're going to have a challenge as an investor more than we do. So I think maybe to center it around what I believe is the kind of advice founders need, right, or mentorship that a lot of founders need. It's it's all about the people, right?
Mm-hmm. Mm-hmm.
Whether
Mm-hmm.
that be in the different stakeholders. The third piece is, um, and it's also having that clarity in your story and translating your vision into a roadmap, right? Because the easiest thing to do is, and I'm sure you've been through this a lot, to say, I want to make getting fuel for your car like getting an Uber, right? I want to bring the gas station on demand, right?
Mm-hmm. Mm-hmm.
That's a crystal clear vision and a clear destination, right? The roadmap between idea and reality, it could get very complicated. So,
Mm-hmm.
modeling your business property, having the right projections, again, researching, reading, understanding what to expect, and clarifying that roadmap. And that, by the way, applies to whether you're building a startup or you're growing or scaling an existing business.
Mm-hmm. Mm-hmm.
That these challenges are quite
Absolutely.
common. We tend to sometimes maybe overcomplicate or overanalyze, borderline. I would say, sensationalize the startup building journey. But building a business is building a business, and the basics remain.
Absolutely, totally agree. Yeah. Yeah, no, absolutely agree. It's definitely a bit of a buzzword, but I think that at the end of the day, as you said, building a business is building a business. Now, putting your, let's say, investor hat on, from a family office's perspective, I know you work closely and help family offices. There's obviously a ton of deal flow that's coming your way. How do you judge what a good company is from an investor perspective? What are the key points? Of course, we talked about the team, but is there anything else from an investor's perspective, growth potential that they focus on? Because I'd be really interested from a founder, a local founder, to know this kind of information.
Yeah, look, one thing to mention is the level of interest from
Hmm.
local and regional family offices in alternative assets in general, and VC in particular, has exploded over the last 3 to 4 years, right?
Hmm. Hmm.
90% of the local, I'm not going to give a number, but a, the greater majority of local private investors or regional private investors are showing significantly increased interest in the venture space. Part of it is a generational thing, right? Because of,
Right.
we're going through that sort of transfer of wealth from baby boomers to
Hmm.
people of our generation or younger. Now, uh, some of these family offices or private investors have quite a mature setup and the right investment team and the right governance to
Hmm.
identify, evaluate, and act on these investments. And many don't, right? And that's why my advice to, by the way, my advice to family offices and founders alike is, I always tell founders, get your institutional lead first, then go to the family offices.
Hmm.
And what I'm advising a family office, I would tell them, make sure that you only invest in startups that have an institutional lead that's been validated. Somebody who knows what they're
Right.
doing has looked at this, has looked at this business.
Understood.
Now,
Yeah.
the guiding principle always for good investment, bad investment, is always going to be the team. Do we have the right
Absolutely.
founder? Do we have the right team? If the answer is yeah, if the answer is no, then there's no sense in looking at the business. Doesn't
Right.
matter how great the horse is if you don't have the right jockey.
Hmm. Hmm. Now, in terms of sectors, I think we've seen A16Z now raise a fourth Web3 fund, crypto fund. I know that's big over there in the local market. How do you see these local kind of crypto Web3 startups compared to other startups? How much interest is there in the space now? To put capital into that.
I saw a meme the other day that says Web 3.0 is like the opera. Nobody understands the word, but everybody's singing along. Um, so uh, look, the space is most definitely growing, right? And again, you have the right regulatory ecosystem that's supporting it, that's looking for regulatory frameworks to enable that ecosystem to emerge and
That's
thrive. So I think that is very, Web 3.0 is definitely a lot of encouraging signs to pick Dubai or the UAE as a home for Web 3.0 startup. What I've been seeing more of than anything, yes, there's you have these few projects here and there, but obviously trading marketplaces, a few of them have been a very big hit and super successful. You're starting to see um, a lot of innovators coming into this country from all over the world, right? Whether
hmm
whether that
hmm
be Europe, Asia, North America, etc.
hmm
So yeah, no, interesting times.
Interesting times, absolutely. Yeah, no, there's definitely the local regulatory kind of proactive, supportive space is beneficial for a lot of people around the world, and that's probably why, yeah, you're seeing so much kind of influx into this space. In terms, okay, let's talk a little bit about recession. We're on the verge. We're coming into, markets seeing a bit of a fall. Um, how are local investors adapting to that? Let's pose it. Is there anything specific that family offices are doing or advising? What would you also recommend to local founders to stay alive? As you know, it's so close to the shit line, I guess.
So, going back to interesting times, it's very clear that I'm not going to say approaching, we are in a period of very high uncertainty,
Hmm.
right? Um, at times like these, a solid business model and the right founder and the right industry to be in becomes far more important, right? So again, it goes back to what stage of the business are you in, right? If you're later, a Series A, Series B kind of company, or naturally post revenue and in growth mode, then what becomes important is the conversation that you're having with your investors and your board,
Hmm.
and
Hmm.
saying, look, we're approaching uncharted times. It's a great opportunity for us to double down, grow, and capture market share or
Hmm. Hmm.
consolidate, right? So commitment becomes super important, right? If you're at a later stage, aligning all of the different stakeholders, aligning with your employees, with your business partners, with your investors, with everybody, delivering that message very clearly. And like I said, you got to have guts, you got to have courage,
Hmm.
um, you know, and saying you got to know where you're going. Yes, troubled times coming, but I need your support in making sure not only that we stay alive, but that we come out of this end of the other end of the tunnel much stronger. Okay.
Yeah.
Now, for an early stage, naturally it becomes a lot more challenging, right? Especially where we are in that cycle today. We're not in a recession. There aren't even very clear or visible signs that we're headed there, but there's a
Hmm.
lot
Hmm.
of speculation, right? And a
Hmm.
lot of concern and a lot of negative sentiment spreading around. Yes, highly unlikely, but where we are today, particularly in this part of the world, I look around me and I see the cities on fire because it's incredibly difficult to identify and attract the right talent, right, in this environment.
Hmm.
So even taking an opportunistic approach becomes a bit more challenging. So for early stage, I'd say if you have a solid business plan, you have the right team, communicate openly with your investors, and have the what if conversations, right? And I always urge founders be as truthful as you possibly can with your investors about the potential underlying risks of this business that you're building, right? Because at the very end, at the very least, you walk away with your integrity, you walk away with your reputation. If you build a startup and it fails, and you manage to, build a good reputation for yourself, then that's a success. But I would say go to your investors as an early stage
Right.
company. Say, I'm concerned about the times to come, right? We need to raise more cash so that we don't run into trouble. So if you usually plan for an 18 or 24-month runway, maybe try to plan for a 36-month runway.
Right.
And and
Right.
also be more frugal than you would have been if we're operating in a 2014 environment.
Yeah. No, and I think that that's great advice. That have that conversation early with your investors, and start that conversation, because that is something that's important and vital as well. And again, that's another reason to have quality advisors to advise you on this essential stuff. But I completely agree. The earlier you have that conversation, if you think that your business is potentially at risk of a downturn at a later stage, the better chances you have of survival in the long term, right? So it's so important to have that. Is there anything else from, let's say, an investor's point of view? that investors are kind of recommending their portfolio companies to do to potentially, or is there a certain sector that investors are shying away from? You know, in case we are going into a downturn.
Um, I mean, look, capital intensive and people intensive business models are always going to be less favorable in these kind of environments, right? And that's where I see investors shying away from. The other thing that I'm finding a bit concerning is you've got this emerging behavior from investors looking at public market comps um, and and benchmarking and using that as a benchmark to early stage companies. And I always have this conversation to say, guys, these are two completely different beasts, right? Your public market comp is growing 30% year on year. Your early stage venture is growing 30% week on week, right?
Mm-hmm,
Your
mm-hmm,
public
mm-hmm,
comp, has maybe fully realized its margin potential. Your early stage
mm-hmm,
company is, maybe could expand their margins by 50, 60%, can double, triple their margin if they continue building and solidifying their business model and scaling it properly. I think this is where if if this does turn out to be a recession like many of us are predicting, then I think again on the other end of that tunnel, the it's going to be it's going to separate those who know what they're doing from those who don't really know what they're doing,
mm-hmm, mm-hmm,
right? And so
mm-hmm.
it's prudent that as an investor, you're careful that you have the right capabilities on your team. You talk about advisors a lot, Vlad, and I respect that. But ultimately, it is that entrepreneur and investor's responsibility to make sure that they internally have the right capabilities to navigate such an environment.
Mhm,
Yes,
mhm,
seeking advice is great. Working with advisors is great. Seeking mentorship is great. But you owe it to yourself, to your investors, to your team,
absolutely.
to be prudent.
Absolutely, completely agree. And one last question before I go, I think a lot of people would be interested is how risk averse are local investors? Are they, because that's obviously a question. I mean, in Silicon Valley, you even compared to European investors, US investors are a lot more willing to take risks. What would you say about the local market kind of investment community?
Um, you really can't paint the local or regional market with the same brush. You have some very sophisticated investors, and
Right.
you have some, less sophisticated, let's say, investors, right? Um, and like I said, this is again, talking about Dubai or the UAE, it's a 50-year-old country, but it's absolutely mesmerizing the level of growth and maturity that we're starting to see
Hmm. Hmm.
within a short period of time. You have some incredibly smart people setting up VC funds and looking after family offices over here. So uh, sentiment is concerned over this uncertainty, right? And uncertainty creates risk aversion, whether you're in Dubai or Sao Paulo or San Francisco or Berlin, anywhere in the world you are,
Hmm. Hmm.
there's definitely that sense of uncertainty which is driving, um, risk aversion. I'm not seeing the same behavior today that I used to see 3 or 4 years ago or 5 years ago. Today investors are worried. Not to mention, deal flow is very active. 3 or 4 years
Interesting.
ago in this part of the world, you have you had a lot of appetite, a lot of money looking into alternative assets, and a handful of smart founders, coming in with opportunities. Today, it's becoming a bit more of a buyer's market. where
Oh, of course, yeah, seeing that
you
as
have a
well
lot
in
of
Europe.
founders, and money is a bit shy.
I think that's a common theme globally speaking. Actually, a lot of consolidation, especially in the grocery delivery space, for example, and in these on-demand type markets. So that's a really interesting theme. Um, anyway, thank you so much for your time. If you are a corporate or a strategic investor, I think, and you're looking to enter the local market, I think Mohammed would be a great conversation. And if you are a local founder, a great advisor to come on board and help you out with some important decisions. So thank you so much for your time today. Really enjoyed that, and hope to see you on again soon.
Thanks for having me, Vlad, and do visit us here in Dubai.
Absolutely. Thanks.
All right.
Thanks.